I wanted to talk a little bit in this episode about a topic that we don't talk about all that often. And that is this idea of tilting your portfolio. Okay. What do I mean by tilting a portfolio? Well, if you start with the basic market portfolio, if you just buy, let's say we're talking about stocks here, you just buy all the stocks. That's the market portfolio. A tilt is when you hold something in a different percentage than the market. And why would people do this? Well, they do this primarily because they want to have higher returns and they think their tilt is going to give them higher returns. Maybe it lowers risk as well, but for the most part, the goal is to boost your returns. So what do people tilt their portfolios toward? Well, a common one is to tilt your portfolio toward smaller stocks or value stocks. Well, a small stock is just a smaller company, right? It's more vulnerable. It has fewer products. It has fewer product lines. It has, less cash usually. It's not as well known. It doesn't have as well known of a brand. And historically, these smaller stocks have shown slightly higher returns than larger stocks that are more well known. Your Disneys and your Exxons, et cetera. And so some people have more small stocks in their portfolio than the actual market portfolio does. Also, value stocks. What's a value stock? Well, a value stock is one that is not growing as quickly. Well, that doesn't sound good at all, does it? But the truth is, value stocks have had greater returns historically over the long run than growth stocks, these stocks that are growing quickly. And the reason why is because people overpay for growth stocks. And so you're getting a better deal on a value stock. You're buying more earnings for what you paid for the stock. And so what do people do? Well, they may have a total stock market index fund, and they may also have a small value index fund. Maybe they have 50% of their money in a U.S. total stock market fund and 10% of their money in a small value fund. And that would be a tilt of the portfolio. Now, should you do this or should you not do this? Well, nobody knows for sure how well these tilts are going to perform going forward. You're for sure going to have more complexity and usually at least a little bit more expense in dealing with your portfolio management. But whether that will pay off or not, well, the jury's still out on that. We can say it paid off in the past, but we can't say it paid off going forward. There are all kinds of other factors out there: profitability, momentum, other things that people tilt their portfolios toward. You can even tilt it toward, one part of the world. You may tilt your portfolio toward China or something like that, for instance, because you think China is going to have fantastic returns. Lots of ways to tilt a portfolio, but when we talk about tilting, that's what we're discussing.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.